Hello, everyone. Welcome back. Today, we're going to discuss how to set financial goals for your small business. Uh, Up top, there is all of our contact information. Follow us on YouTube and check out our website at jmcaccounting.net, where we post all of our blog articles and postings every Monday, Wednesday, and Friday. And then we have follow up videos that come out the very next day on Tuesdays, Thursdays, and Saturdays. So, without further ado, let's get started with how to set financial goals for your small business. So, when you're running a small business, usually you do it all, you do everything. You're the accountant, you're the CEO, you're the CIO, whatever three-letter syllables you want to use, all the way down to the sometimes cashier. Um, you're the operations manager. You do it all, but a lot of times with small business owners, if especially if you're not a financial expert or an accountant, we usually forget to set the goals financially that we really want to see our business do to thrive and grow. And here today, we're going to talk about how to set those goals and make it a little bit more simpler for you, the business owners. Okay. So, what do we want to do? We want to set financial goals and targets that are going to help to grow our business money wise. Think of these goals as, like it says there, a GPS for your business finance. It's a guide to where you want to go. We're going to try to figure out we're going to use our goals as our endpoint on like a map, and we're going to use our goals and figure out how do we get to that end goal? How do we get from point A to point B? What do we need to do to grow our money, to grow our business financially? Usually, we're really good at whatever it is our business is, whether we're a salon or whether we may be a online retailer or we're a knitting company. We're really good at what we do at our core, but are we good and are we setting financial goals for where we need to be? So, step number one, the first thing we're going to want to do is we're going to know where we are right now today. We're going to get a snapshot of our current financial situation. And then we're going to ask ourselves, how much did I make each month in sales or income? How much did I spend? What were my expenditures? Were they a lot compared to last month, or is it going up? And maybe those expenditures going up is a good thing. Maybe that means that we're having more sales revenue, so we're spending more on material or we're spending more on advertising because people really want it. Or maybe it's the opposite. Maybe we're spending more money that we're bleeding out that we don't need to spend. Maybe there's places we could save money, or maybe our revenues are down, but expenditures is up, and we need to cut expenditures or expenses in order to stop the bleeding for our cash flows. The next thing we need to know is what debt do I owe? Do we have any outstanding loans? Maybe this is a loan to a partner in our business. Maybe it's a loan to the bank or some kind of credit cards that we have in our business name, or maybe we have a line of credit. So what do we owe? How much debt is on the business that we need to pay back, or what outstanding loans do we still have that we need to that can really tie up our cash? And another thing we want to know is do I own what do I own? What of our assets on our balance sheet? How much cash do we have in the bank? Do we own? How much inventory, if we carry inventory, do we have? If we're a mechanic, how much do we have in tools? What kind of tools do we have? These are important things to know so that we can have a good starting point as to where we are. And just like it says right there, you don't need any fancy software. All you really need to do is have a good understanding of Excel. And if you're not good at Excel, maybe you could write things down on a ledger or line paper. All you really need is your bank statement to review, to keep your books and records straight. Okay. Step number two, we're going to pick our top three goals. We're just going to start with a few so we don't overwhelm ourselves. Sometimes we get into things and it starts off as a great idea or a great topic, and then we overwhelm ourselves. We become paralysis by analysis. We overthink it. So our best bet is, in order to not overthink it, is just to take our top three goals. We're not going to do five. We're not going to do 10. We're just going to focus on our first three, and that's all that we want to stick with is either 1 to 3 goals. And here's a few ideas of what you can do that are goals that you can set that are realistic and manageable. You can focus on maybe you want to grow your revenues over the next year. Maybe you're more worried about your bottom line and your profits. Maybe you want to keep 30% of what you make as a profit. Maybe your expenses. Maybe you want to cut down on expenses, or maybe you want to increase your expenses. An example of increasing, which isn't a bad thing, is marketing. Maybe you want to market your product a little bit more, or maybe a lot of what you do or what you sell is tied to advertisement dollars. So maybe you do have to spend a little bit more in advertising to get your name out there. Next thing is maybe you want to manage your debt. Maybe debt is a goal. Maybe you want to pay off your business credit cards or pay down a personal line of credit in order to start and really invest into your business. Maybe you want to save. Maybe savings is one thing. Maybe as a small business owner, you want to be able to save 3 months of emergency funds. Maybe that's your goal, is to really save money from your business to help grow, maybe on your personal side or on the business side. Maybe you want to save for 3 months for just in case you're going into, maybe you're in a seasonal business where you know that during the fourth quarter, you're going to make a lot of money because people will love it because it's the holiday season. But then come January, February, March, you know it's going to be a downturn because people aren't going to have much money and your business isn't built for that time of year. Step number 3 is to make it smart. I don't know if you guys have ever heard of the SMART acronym for setting goals, but it's a really good one. And what does START stand for? It SMARTs for specific, meaning that we know exactly what we're aiming for. It's measurable. It's something that we can actually put a time for and we can actually measure it. It's achievable. We're being realistic. That's the biggest thing. We have to be realistic when we set these goals. And then, is it relevant? How will it help your business? Will it help your business? That's the next question you have to ask yourself. Is your goal relevant to what you're trying to do with your business? And then number 3, the last one, is time bound. We need to set deadlines. In 3 months, I want to achieve X. By month 6, I want to do this. At year end, I want to be able to do this. These are time bound things that when that time period comes up, we can take a look back and say, hey, we achieved this goal. Maybe we set a goal that was too low for ourselves and we need to up it a little bit. Or maybe our goal was a little too high for the timeline that we set, and maybe we need to adjust our timeline on that goal. So that's why those having a SMART goal is really good. So just remember, SMART. It's specific, measurable, achievable, relevant, and time bound. So a good example of which is here is instead of saying I want more money, what you can say is I want to increase monthly profits by $1,000 by December. It's something that is very specific. It's something that is measurable. It's achievable, depending on the business that they're in. It's relevant, and it is time bound. We're setting a time of December, so it's time bound. And then step number 4, what we're going to want to do is we're going to want to track our progress. I think a lot of times we forget to check back in with our goals to see exactly where we're at. And this is a very important step that we don't want to overlook, that does from time to time get overlooked. So one thing we're going to want to do is we're going to want to check in our monthly goals or quarterly goals to see, are we close? If not, why? We want to use simple tools like a spreadsheet, a free accounting app, a notebook to jot down numbers weekly. We don't need to be perfect, but you do need to be consistent. This comes back to like we keep saying, discipline and staying the course. Don't let no one or anything take you off your course. So when we're tracking our progress, really the biggest thing is you don't really need an app. Notebook and a spreadsheet is really all you need. Again, we don't want to get stuck with analysis by paralysis. We want to make sure that we're able to have a spreadsheet that's handy or have a notebook that we could jot down our weekly numbers or to be able to track that progress. And then step 5 is adjust when needed. There's nothing wrong with adjusting your goals no matter what. You got to remember, you're in this for the long haul, not the short haul. And if you need to adjust, that's okay. This is your race. You can't let anyone else run your race. So just be flexible and know that life does get in the way and things do happen. But as long as you're consistent, like we said in step 4, and you had the discipline to stay the course of what you need to do, adjustments will be fine. Business is super unpredictable. You never know. Who would have thought back in 2020 we would have been in a pandemic? No one would have seen that coming. But hey, a lot of new businesses and a lot of came about, and a lot of old businesses that were around for a long time actually got shut down because they were unable to adjust. And we also adjusted to that. Okay? So as we're coming to the end here, As we're wrapping up here, here's a good example of setting a financial goal setting checklist. So we're going to pretend like you're a salon owner, okay? We're going to use this checklist to set and track clear financial goals for your salon. You're going to review it monthly, and if maybe monthly may be a little too much for you, definitely want to review it quarterly, but you have to check in with your goals, if not monthly, at minimum, at least quarterly. So here's what we're going to do. We're going to write down our 1 to 5 year business vision. What is the vision for our salon? Next, we're going to calculate our current monthly revenues, expenses, and our profits. And then after that, we're going to list out our short-term goals, which is everything within a year. And then we're going to list out our long-term goals, everything 1 year over to about 5 years. We're going to make the goals SMART. Remember, specific, measurable, and time-based. And then we're going to create an action step for each goal. We're going to review the progress monthly or quarterly and adjust as needed. Just a simple checklist like this can really help you to get far with where you need to go. Okay. Alrighty, now that we're at the end, don't forget to check us out online at jmc-accounting.net, where we post all of our blog information on a weekly basis every Monday, Wednesday, and Thursday. And then on Tuesdays, Thursdays, and Saturdays, we post our videos on YouTube. So don't forget to like us on YouTube and on YouTube. And don't forget to follow us on Instagram at JMC_accounting. Look forward to seeing you guys again next week.